Hey y'all, I'm not really one of these doomsday kind of people, you know, the sky is falling and all that, but I'm really beginning to worry about our calendars. I think their days are numbered. Welcome back, guys. No Nonsense Financial Coach. Just chugging away at the investing talk. Mutual funds. I promised you a video on mutual funds. So, last video we talked about individual stocks and kind of some of the pros and cons and just understanding the risk of investing in individual stocks and what it takes to kind of build a portfolio of individual stocks to where you've kind of managed the risk a little bit. Can be an easier answer than trying to find, 30, 40, 50, 60 individual stocks to manage individually. And that's where mutual funds come in. Basically what a mutual fund is it's a group of stocks. So a company will, let's say the mutual fund is kind of a total market mutual fund, and it's trying to get a representation within the fund of the total market. They will buy stocks of large cap companies, Apple, Microsoft, Tesla, those kinds of companies. They'll buy stocks of smaller companies that maybe you've never heard of before, and all the companies in between. And there'll be value companies that are undervalued, based on their earnings, and there'll be companies that are in the growth category, just kind of chugging away. Think of the S&P 500 companies. Those are, that's an index of the 500, or some of the 500 largest companies. In the last 10 years, the S&P 500 has been growing like crazy. So a mutual fund is just a collection of all of these different companies together. Now, when you buy into a mutual fund, you're not necessarily buying into each company at the same rate. So it's not like, and the way this works is you buy shares of the mutual fund. So within one share of a mutual fund, you might buy into 500, 1,000, 3,000 different companies. And depending on what the goal of the mutual fund is, that's going to determine what company stocks they've put into that mutual fund. So, if a company in a mutual fund has a 10% stake in the mutual fund's portfolio, and you buy one share, 10% of that one share is in that company. Now, usually they're not necessarily that high. In some cases they could be, but basically a mutual fund is just a group of stocks that's been picked by whoever it is that's managing the mutual fund. The cool thing about this is depending on where you're at in life and depending on what your goals are, you realistically could buy into just one mutual fund that meets your investing goals at any given point in time. So let's say you want to have a fairly aggressive portfolio and you want, let's say, 75% of it to be U.S. domestic stocks. You want 20% of it to be international stocks. And then just as a little bit of a buffer, you want 5% of it to be in mid-length treasury and corporate bonds. Okay, so that's a pretty standard kind of diversification. You very well could find a mutual fund that meets all of those categories. So you look at it, you look at the composition of the fund, and it's 70 to 75% U.S. stocks, and it's 20-ish% international stocks, and it's got a tiny little bit in bonds. And unless there's a huge change in the fund, that fund's going to stay that way, for the entire time you're invested in it. Usually, though, they won't change mutual funds' kind of goals. So if you like that spread and that's kind of your investing strategy, I don't know what strategy is. That's a new word I made up. You just buy that one mutual fund. You don't need to look around. You don't need to buy a bunch of mutual funds. you could just buy that one mutual fund. It makes your investing really, really simple. Now, maybe you want to spread those categories apart and you want one mutual fund that invests in the total U.S. stock market. I think that's FSKAX would be an example of that. That's Fidelity's total stock market. And then you want a mutual fund that invests in international, and I think it would be FPNAX. And then Fidelity has a U.S. total bond fund. It's FBNDX or something. Don't quote me on those ticker symbols, but you can find them. So instead of having one fund, you could have three funds. You could have a U.S. stock market mutual fund, and then you could have an international mutual fund, and then you could have a bond fund, and you could invest in three funds. It's still really simple, but each fund is just an amalgamation of that category of stocks, and usually you'll get kind of a different mix in there. Usually it's weighted towards large cap, so you'll have more large cap companies, which has assets over 10 billion, I think, is large cap. I'll make a video about the caps and the value and blend and growth. That probably coming up pretty quick, so look for that. But mutual funds make investing really simple. And I'll get into some of the details of mutual funds and what to look out for and what you want to avoid later, but I'm trying to keep these videos short. So just understand, a mutual fund is basically you're buying into one thing, one stock, one share, but within that, it owns a bunch of different stocks. And so it kind of is a tool you can use to diversify without having to, like I said in the last video, manage 40, 50, 60 investments. So super handy. That's basically what we invest in. Like I said, most of our investments are into various mutual funds, and each mutual fund has its own purpose. I like having a little more control over them. So we have a U.S. stock market fund, and then we have an international fund, and then a small cap fund and a REIT fund, and I just like being able to delineate a little more. But that's the basis of what a mutual fund is it's a thing that you can buy into that is invested in lots of different companies all at the same time. Basically just allows simplification of your investing. So stay tuned. Next one, we're going to talk about index funds, which are closely related to mutual funds, but they have kind of a standard that they follow. So look for that. Like, comment, subscribe, guys. Give me jokes down in the comments. Share your favorite dad joke, and I'll put it in my next video. And then you and I could both be famous together. If you share a joke, I'll put you in my video. All right, thanks y'all. Look for the next one tomorrow. See you later.